Yo, what's up, man? It's the kid Pushmanmitch. You already know what time it is. Host of the No Fluff podcast, back again with another episode of Fact or Fluff. You dig what I mean? I'm about to teach y'all how I was able to purchase my first $1.3 million house, right? A lot of people who've been following me, y'all know my journey, so I like to share every single thing from start to finish. A lot of people get things and acquire different things, cars, houses, businesses, different type of contracts, and they don't never share how they did it or the steps that goes into you being able to do that. And that's why I have this platform, so I can kind of show you guys another way and show you guys the way that I do things. I don't know what nobody else does. I don't know what your favorite coach does or whatever, but I tell how I did it. And it's very cool because some of you guys, it'll be making it more simple for you to understand how I'm able to do what I do. And you can do it because I came from driving Uber, Lyft. I worked every 9 to 5 you can ever imagine. I used to work in ladies' shoe sales. I drove, like I said, I worked at the jail. I was a damn prison guard. That shit was horrible. But I was able to switch and become an entrepreneur, get my credit together, and then I was able to start businesses and scale them from 0, 6 figures, all the way to 7 figures, all right? So basically, let's get back to it. How did I get my first home? I got my home was using what's called a business bank statement loan, right? It doesn't require tax returns. It doesn't require W-2s. It simply requires business bank statements, okay? So now this requires consistency. You can't do this overnight. It takes you 2 years of business bank statement loans to get this entrepreneur loan. As you know, entrepreneurs, they don't have verifiable income, and we have multiple businesses, and we use a lot of leverage in order to scale our business up in the beginning until it's profitable. So it's a lot more difficult for us to get a traditional FHA loan and things of that nature, right? So what we do is we get what's called a business bank statement loan, right? So the cool thing about this is they're going to use all of your deposits. They're going to use all of your deposits, and none of your deductions are going to be factored in. They're factoring in how much does this person deposit every month. They're going to add them up for 2 years. Each month, they're going to average out what you average, and that's how they're going to pre-qualify you for the amount of money. They're going to pre-qualify you for the amount of money that you can be approved for to get a home, okay? So me in particular, I was approved for around 2.9 million for my rental car business. So my rental car business was doing very, very good numbers. I averaged over $100,000 a month. And I did that pretty consistently, and I was able to do that for over a 2-year span, and I was able to be pre-approved for up to 2.9 million for my first home, and I was able to get pre-approved for 3.4 million on the second home as well. So I want you guys to understand that it's a very easy way for you to get into the game. If you're actually a business person who is handling their responsibilities as an entrepreneur, this is a great way for you to get the loan. Now, what factor does credit play? It's not a major factor like normal, but if you have over a 700 credit score, they make you put down 10% as your down payment, right? Make down 10% of whatever home you purchase. Now, in my case, my house was 1.3 million. I put down a deposit of around 180,000. That was including the closing costs, right? So I put down 180,000. I was able to get a $1.3 million home and get a mortgage on that, okay? So that's all I had to put down. Now, if I wanted to put it into my business name and not my personal name, all I had to do is put down 15%. Right? I put down 15% and I was able to put it in my business name. So therefore, it wouldn't go under my personal. It will only go under my rental car business, and my rental car business will own the property and not me personally. So this is just giving you guys a couple of things. If you have under a 700 score, I think it's about the minimum. I think it's a 680. They make you put down 15% to get it in your personal name off the gate. Now, another cool thing about this loan. Now, when you get approved for this type of loan, right? When you get approved for this type of loan, you can get a secondary property as well as an investment property if you put down 25%. So let's say if you found another home that was worth a little bit lower, maybe 200 grand, 300 grand. You could put down 25% and get that property as an investment property and rent it out. You can get a property management company to find who gets to come stay in your home, find all the people who want to live there, and then they'll actually take the funds from them, and then it'll be sent to you in a check every month. That's going to make your property an income property. So you'll have people, a renter, renting and stay inside the home. So that's a good way to get into an investment property. And the cool thing about these loans is sometimes the APR rate is a little higher, right? So that's not a big deal if you sustain keep your good credit. Because what's going to happen is after you had that property for 8 months to a year, you can go in and refinance that and get a lower APR rate based off your credit profile and your consistency of already having a home. So that's a dope part about both of these loans. So now, if you did have a higher mortgage, if it was high, it may not be high, it may be low. But if you did have a higher mortgage on that property, you can refinance and then still keep a tenant in both. So me in particular, both of my homes that I purchased, I actually rent out both of them. I use one for Airbnb and one I have a long-term tenant in. So both of these properties are free, plus I get extra cash flow. So I'm using these properties as income. So basically what happens is the properties are free. I can live in when I want to. I can actually use them for photo shoots, video shoots, and clearly short-term tenants. I even have a movie. I had a movie shot in my house as well because it's such a nice house in the middle of the city. It was used for a show. So that's pretty dope. And also the cool thing about it is it's a piece for leverage. So what happens is you start off going into it to live there, then you end up having an investment property. Now you have an asset that pays for your regular living. So my houses actually pay for some of my car notes. They actually pay for my credit card bills. They actually pay for a lot of things. So I don't pay anything my customers do. So you want to start being able to do leveraging that magnitude. So me, I started off with cars, as you guys know. Then I went to Airbnb, and then I started getting my own real estate. And now I not only do I leverage my cars, I leverage my short-term leases. I also leverage the homes that I own. So I want you guys to be able to start doing these things as well. That's why I wanted to break down that program. So with the time frame it varies based off of your realtor, based off of your loan officer. But I want you guys to start looking into these type of things so you can get into your own ownership and have your own property. So if you learn anything on this episode, please like, comment, and subscribe. If you got any questions about it, put it in the comments. I may be able to see it, check it out, and then answer you if you need any help with that. If not, subscribe to the podcast. We're going to have more and more information just like this so you can be able to get your first type of home or whatever you want to do, man. You know, the sky is the limit. The key is, again, get that credit together, start that business, take it seriously, and then when you look up, you have everything you ever dreamed of. Pushman Mitch out of this thing. That's another episode of Fact or Fluff. We out of here. You dig?